We launched Smart Money Active Cash approximately 3 years ago as a convenient, liquid, active strategy that competes in the cash and short-term fixed interest spaces. It targets returns of more than 1 to 2% per annum above the RBA cash rate. Historically, it's delivered 5.5% per annum after all fees. In the last 12 months, in 2014, it provided a return of 4.1% per annum after all fees, with very low volatility or risk of less than 0.5% per annum. It also provides significant diversification across a large number of Australian banks. It invests in both Australian bank deposits and investment grade floating rate notes, but crucially, it doesn't invest in fixed rate bonds and therefore has no interest rate duration risk and doesn't invest in sub-investment grade credit or foreign bonds. Smart Money Active Cash only invests in Australian issued deposits and investment grade floating rate notes. It doesn't invest in fixed rate bonds and therefore carries no interest rate duration risk, which is associated with conventional fixed income strategies. Within its deposit and floating rate note portfolio, Smart Money Active Cash is incredibly active and selective in terms of the assets it chooses to introduce. So Smart Money Active Cash is a very telescoped and focused mandate, and we can't invest in foreign issued bonds, fixed rate bonds, equities, equity hybrids. We can't invest in sub-investment grade assets or unrated assets. We can't leverage the portfolio. We've never used derivatives, and we can't invest in any related party securities. Some fund managers tend to have very broad and ambiguous mandates, and we wanted to ensure that Smart Money Active Cash was a genuine active cash or short-term fixed interest solution that only invests in Australian issued deposits or investment grade and Australian issued floating rate notes that are almost entirely bank issued securities. So really it's a portfolio of bank deposits and bank floating rate notes with very low risk, delivering returns that are 1 to 2% above the RBA cash rate with daily liquidity. Smart Money Active Cash has historically, over the last 3 years, generated substantial outperformance over cash and other short-term fixed interest products through several key mechanisms. The first is we have been able to negotiate superior interest rates on our deposit portfolio that are well above retail rates. Secondly, we also get very good interest rates on our floating rate note portfolio, which tends to be diversified across over a dozen banks. And then thirdly, we're extremely active in the selection of the individual assets. We're looking for floating rate notes that are cheap and that will generate superior returns in the future as they converge back to fair value. Finally, we're also very active on asset allocation between our cash portfolio, our deposits, and our floating rate notes. And we're looking for relative value between those two markets. So our cash weight can go as high as 85%, as it was in August 2014, or as low as, for example, 35%, which is where it was in December 2014. Smart Money Active Cash has appealed to investors looking for returns that are 1 to 2% per annum above deposits with low risk and maintaining, crucially, that daily liquidity. Now, those investors have ranged from large institutional super funds that are awarding $15 to $35 million mandates to ultra high net worths and family offices, financial advisors running significant amounts of money, SMSF trustees, retirees that want security of income and capital stability with that daily liquidity, and then mums and dads on Main Street. So Smart Money Active Cash delivered 4.1% after all fees in 2014. Over the last 3 years, it's returned 5.5% per annum. But it targets 1 to 2% above the RBA cash rate. And 3 years ago, the cash rate was obviously at 4.25%. Today, it's at 2.25%. But that performance places it in the top 10% of all managers covered by Morningstar in their short-term fixed interest universe, which comprises 43 products.